Hello, and welcome to the View from IMF 2020 video series. This year, the annual meetings are being held virtually for the first time. I'm Joy McKnight, Managing Editor at The Banker, and I'm joined via video link by Joseph Abraham, who's CEO of the Commercial Bank of Qatar. Thanks for joining me, Joseph.
It's a pleasure.
So can you tell me a little bit about how the COVID-19 pandemic has impacted the Middle East region, but maybe more on Qatar more specifically?
The Middle East as a whole has been impacted, like all parts of the world, in the regular sectors, hospitality, tourism, air travel, and particularly where there are air hubs. So that's, I think, a general phenomenon across the world. The Middle East has probably been more particularly or specifically impacted because of its dependence on hydrocarbons for a major part of exports. And that has affected most of the Middle Eastern countries. And that's primarily seen through the government budget deficits and spending that they'll be able to do. With regard to Qatar, Qatar benefits from the fact that it has the lowest fiscal break-even level at $45 per barrel equivalent. So in that sense, they have, and they also have significant buffers that they've built up over the years. So they have a little more, I'd say, scope for spending to support the economy. And the government has actually come out with some very specific stimulus measures to support the SME and other sectors, coupled with the fact that they have continued to invest in infrastructure for the World Cup in 2022. That's going on apace. And also the expansion and diversification that they had for the airport. That expansion is continuing, and similarly for the seaport, in terms of building logistics capability and self-sufficiency and security in food grains and other essential items. So that has, I would say, helped to support the economy. And Qatar remains probably one of the strongest in the GCC region. And even Goldman Sachs in their review said that Qatar and Kuwait are probably the two countries in the GCC which will have a fiscal surplus in 2021 and then increasing further in 2022.
What role do you think the banks can play in really driving a resilient recovery?
Well, I think unlike 2008, where the banks were probably the cause of that crisis, in this current situation, the banks are actually the transmission mechanism for many of the government measures to support the economy, whether it's here or in the US or in the UK. The banks are actually playing a very important role in supporting the real sectors of the economy through loans. And in Qatar, we have the National Response Guarantee Program, which is a program to support the affected sectors for their rentals and salary payments. So I believe that is one very immediate aspect. And this is, the banks are being used as that transmission mechanism for support for the economy from the government measures. But I think they're also playing an important role in continuing, I'd say, digital adoption by their clients and by their not only retail clients, but also in their business customers. And those initiatives are very important. In a post-COVID world, the concerns around hygiene, cashless transaction capability, all will remain and become more important. And I think the banks will play a very important role in that area too.
So can we talk a little bit more about the digitization of the banking sector? You know, has this really been accelerated by COVID-19, and how is this playing out?
Acceleration, I would say it's brought forward the adoption by the clients by 3 or 4 years, definitely. Because of COVID, people have not been able to visit the branches. And so they've had to use their digital banking capability. In addition, we've had to introduce a number of new innovations, whether it's for remittances, whether it's for our clients in the business sector, so that they don't have to do face-to-face transactions. They can just send a QR code and then the client will be able to pay. So there's many innovations in that side. And I believe that is going to continue. And as an example, we were the first to introduce an appointment system to visit a branch. Now, people make an appointment as routine to visit the hairdresser or visit the doctor, but not the banking needs. And I think this has been adopted by clients, and they've actually liked it because now they have certainty of how long they're going to spend, and then they go there, which is true of any appointment. So that was something which was new. And similarly, we're seeing the adoption by customers of virtual meetings. And that, I believe, will continue. And we will enhance it with, I would say, authentication capability, whether it's voice and video. Once you get voice biometrics going, then you can actually authenticate a transaction. Your voice is your password. So you can, on a video call, you could say, okay, I want to do this remittance. And that would get done without the need for paper. And I do believe that move will be such that people should be able to do all their banking without having to come to a branch and without having to fill up lots of paper.
Okay, and my last question is really about how you envision the banking sector of the future post-COVID-19.
As we talked about, the digital initiatives will continue, and I do see clients will not visit a physical branch, and the nature of banking will move away from transactional to more advisory, as people will also look to diversify their savings away into different classes of assets. On a more macro basis, I would say that banks and society in general probably have to look at the implications for the climate. I think that's the COVID has made us realize that we're all connected. So banks will place more emphasis on ESG and on the financing that they do. I'd say there'll be more focus on income inequality and ensuring that segments of society are properly focused. I think those are the broader societal trends around the environment and societal inequality or equality measures to support it. I think banks will be part of that too.
Excellent. Well, thank you so much for your insights, Joseph.
Thank you very much. It's been a pleasure.